This is Nightly Business Report with Tyler Matheson and Sue Herrera.
On hold, the Federal Reserve may not have moved on interest rates, but the central bank did say a lot about where it sees the economy heading. Profit problem, why investors can add one more item to their list of things to worry about. And senior scams, millions of older Americans fall victim to financial fraud. But there are things that you can do to protect yourself or those you love. All that and more tonight on Nightly Business Report for Wednesday, June 15th. Good evening, everyone. I'm Sue Herrera. Tyler Matheson is on assignment tonight. The Federal Reserve stands pat. Not only did the central bank unanimously decide not to raise interest rates, but it also lowered its economic growth outlook. And if growth is anemic, don't expect as many interest rate increases. Not this year, not next, and not even in 2018. That is a big shift in the central bank's thinking since the Fed chair's last news conference. Hampton Pearson has more on what's changed and what the Fed is saying now.
Halfway through 2016, Fed Chair Janet Yellen and her fellow monetary policy advisors are still on hold when it comes to raising key short-term interest rates.
We really need to look at the data, and I can't pre-specify a timetable, so I'm, not comfortable to say it's in the next meeting or two, but it could be.
The latest speed bump on the road to interest rate hikes, an anemic May jobs report, part of a mixed economy in the eyes of the Fed, where the pace of job growth has slowed, while overall economic activity has picked up, due in part to increased spending.
Now the labor market appears to have slowed down, and we need to assure ourselves that the underlying momentum in the economy has not diminished.
There is also concern about the future of the European Union if Great Britain withdraws. The Brexit vote is just 8 days away.
It could have consequences in turn for the U.S. economic outlook that would be a factor in deciding on the appropriate path of policy.
The vote for today's policy action was unanimous, with the odds increasing for just one rate hike this year. Policymakers are also lowering their long-term trajectory for rate hikes as well. Leading economists now see a Fed that is losing touch with the real economy.
There is no excuse at a 4.7% unemployment rate to have a federal funds rate which is negative in real terms and just, between 25 and 50 basis points. There's no excuse for it.
The visibility of the jobs number earlier this month and the noise around Brexit, I think, causes them to wait yet again.
By the time of the next Fed meeting in late July, the Brexit vote will be history. And there'll be another batch of data, including another jobs report, also on the table. For Nightly Business Report, I'm Hampton Pearson in Washington.
Scott Miner joins us now for more analysis on the Fed and the economy. He is Global Chief Investment Officer at Guggenheim Partners. Good to see you again, Scott. Welcome back.
Thank you, Sue.
Let's start, first of all, with your thoughts on what the Fed did not do today. They did not move on rates, obviously, and you think they're going to be hard-pressed to get even more than one rate hike in.
I think so. Sue, given the weakness we got in the last employment report, the Fed's going to want to see more than one monthly report of strength from here. And so, given what's going on, I think in July they're not going to have enough information, and that gets us to the September meeting. Of course, when you get to September, that is historically a very rough month for financial markets. The Fed has shown us in the past that when markets are volatile, they don't like to move. So I think the clock is running out, and the calendar is working against them.
You know what I found interesting, and I'd love your thoughts on this, is also their projections for rates. They basically saw a downward projection for rates all the way out to 2018. That does not sound like it bodes well for the economy.
No, I don't think so, Sue. I think the Fed has been, very watchful of the employment market. They've also been keeping an eye on inflation. And even with an unemployment rate at 4.7%, we're not really seeing a sharp uptick in inflation. And I think the Fed is wary that perhaps unemployment has to be much lower than it was today at 4.7%. So I think the chairwoman was very clear that she wants to keep an eye on the data, but I think it's going to take a lot more than 1 or 2 months of strong growth to get the Fed to move.
And the jobs numbers are complicated, are they not? Because you do have an enormous number of people who are the quote-unquote discouraged workers, those who have stopped looking for work or dropped out of the workforce for various different reasons. Does that skew the data that the Fed has to deal with?
It certainly does. You know, one of the things the Fed has been looking for is an improvement in what they call the participation rate. That is to bring some of these workers back into the workforce. But in the last employment report we saw, the participation rate fell rather sharply. And, Dr. Yellen has been very clear in the past that bringing these workers back into the workforce is very important to her. And so I think they're going to try to see the participation rate rise from here. And I think that's going to take a substantial period of lower interest rates than where we are today.
How important is the British vote next week as to whether they stay or leave the UK, the European Union?
Well, I think it's very important, Sue. If the UK decides to leave Europe, it's going to raise questions about what other nations might want to leave Europe, and it's really going to bring a lot of discouragement as to the ongoing existence of the euro. So if the UK were to vote to leave, I think we would get a lot of market volatility, and we would see European stocks much lower, and that would probably spill over into the United States.
The other issue that we were hearing a lot about today was whether or not the market has lost faith or whether the Fed has lost credibility in the market's eyes. What do you think?
Well, I think the market is beginning to realize that that low interest rates are not a cure-all for the economy, unless the Federal Reserve continues to maintain this policy going forward, it's making equity prices and other investments in the market vulnerable to a sudden shock. So I think that the Fed is in a trap at this point, that any increase in interest rates in the United States will be looked as slowing the U.S. economy. The Fed clearly doesn't want to be doing that, and so they've become a hostage of their own policy.
On that note, Scott, thank you very much. Always a pleasure to speak with you.
Thank you, Sue.
Scott Minerd with Guggenheim Partners. Well, stocks gave up their gains following the Fed chair's news conference. The Dow Jones Industrial Average posting its first 5-day losing streak since February. By the close, the blue chip index lost 34 points to 17,640. The Nasdaq fell 8, and the S&P 500 was off 3. And inflation is on the Fed's radar, and today we learned that the prices firms receive for goods and services rose last month. The Labor Department reports a 0.4% increase in the Producer Price Index. That was more than expected and its biggest gain since January. Most of the increase was due to higher energy prices. Inflation has been running below the Federal Reserve's preferred 2% target. The nation's CEOs are turning more bullish on business investment. According to the Business Roundtable's second quarter survey, more chief executives plan to increase capital expenditures this year. 37% of the CEOs at the country's largest firms say they intend to spend more in the next 6 months, up from 34% in the first quarter. 18% say they plan to cut back, but that is fewer than the 23% who cited a reduction in capital spending in the last survey. An upturn in business investment is considered a positive for longer-term economic growth because it improves productivity, wages, and corporate profits. But there is, of course, one industry that will not be spending a lot, and that is the oil and gas business. A new report from consultant Wood Mackenzie shows the industry could cut $1 trillion from expenditures on exploration and development. The reason is that long slump in prices. Worldwide oil and gas production has fallen sharply since the drop in crude that began in 2014. As we mentioned earlier, Fed Chair Janet Yellen said that one of the reasons why the central bank did not raise rates today was because of the uncertainty surrounding the upcoming referendum in the UK. But the rise of the movement to leave the United Kingdom has some similarities to the rise of Donald Trump and the political climate here. Wilfred Frost explains.
Trump versus Brexit. There have been lots of comparisons, not just because they shared crazy blonde hair of the Donald and the Boris. Let's dive into that and explore the similarities first. Number one stems from Donald and Boris. Both have a straight-talking nature and celebrity status that endears them to voters far more than other politicians. Second similarity, their supporters tend to be older, also part of smaller businesses or self-employed. Third similarity, there is a definite connection on the issue of immigration, albeit with some important nuanced differences. But I would argue some crucial overall differences far outweigh those similarities. First up, free trade. Trump opposes it and advocates protectionist measures. Brexiteers, meanwhile, seek free trade just as much as the UK's Remain camp does. They just seek it in a different way. Difference two, Trump's rise stems from an annoyance with elected Washington political insiders. Brexit is about unelected Brussels outsiders. Brexit is about British sovereignty, whereas American sovereignty is not in doubt, whether under Trump or Clinton as president. Finally, Trump's rise is new and recent. UK opposition to Europe, however, stems from before the first incarnation of the EU in 1951. There has even been an in-out referendum before in the UK in 1975, which was delivered by a Labour government, highlighting the extent and longevity of the anti-Europe debate in the UK. So, fun observations to make between the two, but in my eyes, no conclusions to draw from next week's UK vote for the US election. For Nightly Business Report, I'm Wilfred Frost.
From Brexit to interest rates, and now a new concern for investors, rapidly falling corporate profit expectations for the second quarter. According to S&P, analysts are looking for a 4.7% decline in profit growth for the second quarter. And that is a dramatic change from 2 months ago when earnings were expected to fall just 2.5%. So does this mean that the profit recession may not be over? Let's turn to Lindsay Bell, senior analyst at S&P Global Markets Intelligence, for some answers. Good to see you, Leslie.
Good to see you, Sue.
Let's start first of all with why this big change. What can you tell me?
Well, I think the big change that you're discussing is really, it started at the beginning of the year. We saw global economic uncertainty, weaker than expected economic data here in the U.S., and we had unseasonable weather. So all of that combined to make the perfect storm to cause analysts to cut their earnings estimates as the first quarter earnings season began in April. So those numbers were slashed dramatically. So in the first quarter, numbers came down by 9 percentage points, which is huge. But when all was said and done, which is about where we're at right now, the numbers came only 2.5 percentage points better. Typically, for any given quarter, earnings come in 4 to 4.5 percentage points better. So that was kind of uninspiring. And a decline of 5.4% for the first quarter is certainly weak. It was the third quarter in a row that we saw earnings decline. It's not a good thing. And management outlook for the second quarter and the remainder of the year remained subdued, even kind of was provided downward guidance because there was so much uncertainty in the environment.
Let me just interrupt you. A lot of people thought that we were in a profit recession that was ending, but it doesn't sound at this point that that's what's happening.
Well, see, I'm not so sure that's the case. The silver lining here is that the second quarter earnings growth, while it's supposed to decline 4.7%, that's better than what we saw, the decline we saw in the first quarter of 5.4%. So sequentially, it's better. For the 3 prior quarters, the earnings recession we thought would bottom in each of those quarters, and it kept getting pushed out, We finally are seeing that the first quarter seems to be the trough. If it remains that way and the second quarter comes in better than the 5.4% decline, which it should as things currently stand, assuming that 4 percentage point beat rate, then we can get a little more encouraged about the profit recession ending and us finally beginning to see growth rates increase for the S&P 500 in third and fourth quarters.
What does it mean for the economy overall, though, Lindsay?
Well, I think it just goes to show what your first guest talked about. This is a slow economic growth environment, and you can't expect earnings growth to grow substantially higher than economic growth in this type of environment. A huge weight on the S&P 500 this quarter and then the past 4 quarters where we've seen negative growth has been the energy sector, and energy prices are finally starting to rebound. They're up over $10. WTI is up over $10 in the last 2 months. I know we've kind of stalled out here just below the $50 mark, but also we're seeing currencies, the U.S. dollar, the strength in that has begun to weaken. These are all very good things for corporate profitability. So that will be a great thing going forward. But again, I think we all have to, we're in this uncertain environment still. We got to see what happens with the Brexit. That's going to be really important because that could pressure energy and the dollar.
And the dollar, yes.
Altogether, that's going to pressure earnings.
Lindsay Bell with S&P Global Markets Intelligence. Thank you, Lindsay.
Thank you.
Still ahead, the brain drain at Viacom, when it might stop, and what the company is doing about it. Presumptive Democratic presidential nominee Hillary Clinton outlined part of her economic plan to USA Today. In an interview, she said that if elected, she would use her executive action to end a tax loophole for wealthy Americans. Clinton said she would ask the Treasury Department to close the carried interest loophole, which allows hedge fund managers to pay a lower rate than other taxpayers by counting their income as investment income. Sumner Redstone, the 93-year-old media mogul, reportedly went to visit 2 of his companies recently, CBS and Viacom's Paramount. According to the Wall Street Journal, Redstone stayed in his vehicle while he met with executives. The rare appearances come during a heated legal battle between Redstone and Viacom CEO Philippe Dauman. Both are fighting for control of the company. Meantime, Sumner Redstone's daughter, Sherry, reportedly met with Alibaba founder Jack Ma about buying Paramount Pictures. As first reported by the New York Post, the 2 spoke last week, and the talks come as Sherry gets up to speed on the studio's sale process, something currently being orchestrated by Viacom CEO Philippe Dauman. And every twist and turn in the Viacom drama seems to come at the expense of morale at the company, where executives are leaving at a rapid pace. Julia Borston has more on the departure of Viacom's top talent.
Morale at Viacom is miserable, say sources at the media giant, under a cloud of a legal battle between Viacom's controlling shareholder Sumner Redstone and CEO Philippe Dauman. Plus, television ratings have been in decline, and there have been a string of disappointments at Viacom's studio. All this uncertainty coinciding with a slew of high-profile executive departures. Just this week, longtime MTV executive, head of reality TV Lauren Dolgan, stepping down after 19 years. Earlier this month, Nickelodeon president Russell Hicks announcing his departure, and last month, Comedy Central president Michelle Gainless announcing her exit.
Viacom has had really too much rotation in its executive ranks, including people running the networks and the creative side. And I think you really need continuity. I think that the human relationships, both with people running the networks themselves and with the creative talent on the air, are very important, for a media company.
With a ruling pending on Dauman's lawsuit challenging his removal from Redstone's trust, there's no sign of upheaval in Viacom's management ranks slowing anytime soon. Viacom's lead independent director, Fred Salerno, sending a letter to Sumner Redstone just yesterday, imploring him to provide more transparency about his plan for the company and saying Redstone's opposition to selling a stake in Paramount is not in shareholders' best interest.
Here we go!
Viacom studio Paramount is under particular pressure because performance has been lagging. Recent Teenage Mutant Ninja Turtles sequel falling flat, putting the studio in 5th place for box office market share this year.
I think Paramount's management is really on the hot seat. They have had very uneven success. There's been too much sequelitis. I think there's too much of a tendency toward financial engineering.
With Dauman and Redstone battling over whether Paramount should remain wholly owned by Viacom and upheaval across the company, Harrigan predicts Dauman could be out of a job within 9 months. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Retailer Bed Bath & Beyond buys One Kings Lane, and that's where we begin tonight's market focus. One Kings Lane, which sells discounted home decor on its website, was once valued at around $1 billion back in 2014. Today, the e-commerce company is likely worth a lot less. Bed Bath & Beyond bought the company for an undisclosed amount, but did say the purchase price was, quote, not material. Shares of Bed Bath & Beyond only up a fraction on the news to $42.94. Bank of America is cutting more jobs. Up to 8,000 positions are expected to be eliminated in the company's consumer banking division, with the majority coming from attrition. At the same time, Bank of America will be hiring in its sales unit. Shares up a tick to $13.34. Shares of U.S. steel producer Nucor rose on better than expected guidance for the current quarter. The company says it expects to benefit from higher average selling prices and improved volumes. That sent shares up nearly 2% to $50.45. Shares of Whole Foods were hit following news the Food and Drug Administration has sent a letter to the company saying it found, quote, serious violations in a Massachusetts plant during a February inspection. The organic grocer responded to the claims back in March, saying it would address those issues, but the agency remains unconvinced and gave the company 15 days from the time that they received that letter to provide proof of the corrections. Shares fell nearly 5% to $30.92. Jabil Circuit, which makes parts for iPhones, topped both profit and sales estimates. The electronics manufacturer also announced a $400 million share buyback, but shares initially fell after hours on weaker than expected forecasts for the current quarter and the full year. Shares finished the regular session down a fraction to $18.43. AmSurge, which operates ambulatory surgery centers, will merge with medical transportation provider Envision Healthcare in a deal valuing the company at about $10 billion. Shares of AmSurge rose in the extended session, while shares of Envision Healthcare fell on the trading day. Coming up, what you can do to slow the alarming rise of financial abuse among the elderly. A milestone for the state of California. That state economy is now bigger than France's and the sixth biggest in the world. That's according to a newly released state data. The most populous U.S. state has a gross domestic product of $2.5 trillion. Tech companies like Apple and Facebook are helping drive the economy, along with a growing agricultural industry. Last year, California created the most jobs of any state. A new study is forecasting a big hike next year in health insurance premiums under the Affordable Care Act. According to the Kaiser Family Foundation, premiums for the popular low-cost plans are expected to rise an average of 10% in 2017. The impact for consumers will depend on whether they receive government subsidies. Today is World Elder Abuse Awareness Day, shedding light on a common and often underreported problem. More than 5 million older Americans are financially exploited by scammers, caregivers, and sometimes even a family member every year. Sharon Epperson is here now with some advice on what seniors can do to safeguard their finances and how their children may be able to help. Good to see you as always, Sharon.
Good to be here, Sue.
Not only is this just a terrible situation for many elderly people, but it's a costly one as well.
It's very costly. And, you know, the 5 million victims that are expected to fall prey to financial abuse every year, that number could be much higher, 20 times higher when you consider that it often goes underreported. One report found 1 in every 44 cases is only 1 in 44 is ever reported. And when you talk about the cost of criminal fraud and theft, financial exploitation, and also abuse by caregivers and sometimes family members, we're talking about $36.5 billion a year.
Why is it underreported? Are people afraid to report it, or maybe they're embarrassed that they were scammed or something along those lines?
I think shame definitely has something to do with it. But one person that has prosecuted a lot of cases against scammers that have taken advantage of the elderly said another common occurrence is cognitive impairment, is dementia, is Alzheimer's. And elderly being afraid to admit that they're suffering from memory loss and family members not seeing the signs.
Right. Or not wanting to see
Or
the
not
signs
wanting to
because
see
it's
them
such a
as well.
difficult situation. So if that's the case, what are some of the red flags that family members or caregivers or others should look for?
So one of the things to also keep in mind is financial services companies also want to do something about this, but it is difficult for them often to be able to share information that they may see in terms of suspicious activity with family members if they don't have power of attorney or some reason to do so. So you need to be, as a family member, really diligent and looking at your elderly parents and seeing what is happening in their home. Piled up notices from creditors, bills that have gone unpaid, boxes of things that they've purchased that you don't understand why they've purchased them, big withdrawals from their bank accounts. Look out for all of those as possible warning signs that something's amiss.
So how do we protect them? And perhaps more importantly, how do we empower them to protect themselves?
Well, they definitely need to be able to protect themselves. Another thing to keep in mind, though, is they should look out for some common scams with Medicare, because of course a lot of seniors are facing that.
Sure.
So anytime you get a call saying that Medicare is going to offer you something for free and it doesn't sound right, that might be a sign. Or that you're going to get a new card, but give me your Social Security number, your Medicare number. That's often a very common scam. So you want to be really wary of those scams. But the important thing that family members can do is to have the talk. It's such a difficult conversation to have for many people, but it's so important to do as soon as possible and find out how you can help your parent. Perhaps it's automating bill pay and making sure that you have oversight about that. It may also be just making sure that you are aware of some of the purchases they're making, where their documents are being kept, and keep someone else, if you need to, in the loop, like a financial advisor or a tax professional, but make sure that you look over what they're doing as well.
All right, Sharon, always good advice.
Sure. My
so
pleasure.
great to have you here, Sharon
My
Epperson.
pleasure.
And for more tips on how to protect older Americans from financial abuse, head to our website at nbr.com. And that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining me and have a great evening. We'll see you right back here tomorrow.